Do you know that most financial institutions, hedge funds, companies, and banks rely on closed bars to do their analysis? Hi, this is Load with Black Bear Dog Trading, and as always, welcome wherever you are in this world. I'm glad to have you on my team. It's true, most professional trading entities rely on closed bars to do their analysis. Yet here we are, retail traders, still trying to make sense of a live bar that is daubing up and down in front of our face, hoping that we can make some kind of sense out of it, and more importantly, have a winning signal with it. But yet, as I said, the big guys all rely on closed bars. Why is that? Well, it's because a closed bar offers a whole lot more information, reliable information that can be used to trade successfully long term that an open bar or an active bar can't. For example, a closed bar is final. The open, the high, the low, the close have been established. You can't change it. There is nothing in the world that can change it. It's done, it's final. So it gives you very good information of what happened. If you take several closed bars and combine them together over a certain period of time, you get a really good historical analysis of what happened in the market. And based on those findings, where you might want to take your next signal, buy, sell, or wait. There's another reason why it's psychological discipline. When you look at a live bar and it's constantly up and down, up and down, up and down, and truth be told, we've all been through it, myself included. After a while, you become a little crazy in your brain because you think you're up, but then it retraces. You think you're down, but then it moves back up, and you really don't know. You think you hit a ceiling, and it looks like it's going breaking through, but boom, and I mean, it goes crazy. You don't have that with closed bars. Again, for the simple reason, the history of that bar is locked in, will no longer change. Another reason why such large entities rely on closed bar is because it gives you a solid trend confirmation. And that is very crucial in your trading, whatever strategy you use. For example, a closed bar that is near its high in an uptrend or near its low in a downtrend confirms momentum and strengthens the conviction of that trade. You don't have that with a live bar. But of course, there are also drawbacks of using a closed bar. And the drawback is that you potentially capture slightly better entry prices if you enter before the bar closes. Um, you have a little bit of a risk of a little higher risk of a false signal because bars may actually reverse before they close. So that could make the signal that you think is a little bit um, okay, not so okay. However, the pros are that the signals you do get are much more reliable, you have much better indicator accuracy, and you become disciplined in your trading because you're not sitting there waiting for a live bar to, make your decision on. Another drawback is that, of course, you need a lot more patience now. But personally, I think that's a good thing. So, again, in short, don't overlook closed bars. They offer consistency. They offer real trading history. They offer accuracy, and start using them in your analysis to make your trading decision. I made a short. It's only a one sheet page PDF file, and you can download it. It gives you everything I just talked about in a nice little graph. It's only one page. It's something nice to have. so that you know exactly why you should focus and do your analysis on close bar. Now, I know a lot of people will say, a lot of traders will say, well, yeah, but wait a minute, that doesn't make any sense. You're looking in the past. Don't we need to look in the future? See, trading isn't gambling. It's not about predicting, it's about accuracy. When you're looking into the future, you are trying to predict where the market is going. As of yet, no one, and I absolutely mean no one, has been able to do this successfully. You may succeed once, twice, 100 times, but then comes one time that you're absolutely wrong, and all the hard work you did and all the gains you made before wiped out in a single trade. So it's all about accuracy, it's all about quality, and that is where closed bars shine over and above an active bar at any time. And it's the primary reason why so many hedge funds come, so many, all of them, hedge funds companies, financial institutions, banks, all have their analysis conducted on closed bars. It's a winning strategy. More than that, it's a long term winning strategy. And that is really the name of the game here, long term. You don't want to be a profitable trader for a month. If you're like me, you want to do this full time and you want to do this for the rest of your life. So download the PDF. It's short and it's something, a little nice little thing to have by your desk. If nothing else, at least you gain a little bit more insight. Okay, this is Load with Black Bear Dog Training signing off. Have a wonderful weekend. Stay safe. And as always, God bless.